Hi, I'm Warren with Warren's Money Buffet. Let me take you back 5 years to a moment that every investor and honestly every person dreams about. I had $8,000 in my hands and two very different paths in front of me. On one side, a dream trip to Japan, luxury flights, cherry blossoms, Michelin star sushi, bullet trains, and memories that could last a lifetime. On the other side, a chance to buy Tesla stock at $240 a share, a company that was just beginning to revolutionize the auto industry and the future of energy. I chose the trip. That decision, as it turns out, cost me nearly $92,000 in unrealized gains. But before you judge me, let me tell you why I might make the same choice again, and what I learned about money, happiness, and the true value of experiences. It's January 2020. The world is on the cusp of change, though none of us know it yet. I had just received my year-end bonus, $8,000 after taxes. My wife and I had been planning this luxury trip to Japan for years. We dreamed of walking under the cherry blossoms in Kyoto, savoring sushi that melted on our tongues, riding the bullet train at 200 miles per hour, and soaking in the vibrant culture from Tokyo's neon-lit streets to the serene temples of Nara. But my investing buddy was relentless. "Buy Tesla," he texted. "Model Y is launching. This is your shot." Tesla was trading at $240 a share, split adjusted, with a market cap of $44 billion. The Model Y was just starting deliveries, the Shanghai Gigafactory was ramping up, and they delivered 367,500 vehicles in 2019. Bulls called it the iPhone moment for cars. Bears warned of competition and cash burn. Elon Musk was a whirlwind of innovation and controversy. I was torn. On one hand, the trip was a once-in-a-lifetime experience. On the other, Tesla was on the brink of something massive. I chose the trip. So what did that $8,000 buy me? Here's the breakdown of our dream Japan trip for 14 days in March 2020. We splurged on business class flights from Chicago to Tokyo on ANA, which cost $2,800 for two. Domestic flights within Japan ran us $400. Hotels, Tokyo Park Hyatt, a traditional Kyoto Ryokan, Osaka's St. Regis, a Mount Fuji resort, and even a capsule hotel, came to $4,300. Experiences and food included Michelin star dinners, sumo tournament tickets, a traditional tea ceremony, Disney Sea, Tsukiji market tours, robot restaurant, street food adventures, and sack tastings, all together totaling $2,550. Transportation, the JR Pass, taxis, and local transit, was another $1,000. Shopping and miscellaneous, like souvenirs and unexpected costs, added up to $950. The grand total, $12,000. Yes, we went $4,000 over budget, but every penny was worth it. I came home with over 300 photos, inside jokes that still make us laugh, stories of getting lost in Tokyo at 2 a.m., and a breathtaking sunrise at Mount Fuji. But what if I'd bought Tesla instead? Let's do the math. $8,000 at $240 per share equals approximately 33.33 shares. Fast forward to May 30th, 2025. Tesla closed at $346.46. My shares would now be worth $11,548. But, and this is important, Tesla split its stock twice since 2020. The first was a 5-for-1 split in August 2020, and the second was a 3-for-1 split in August 2022. If you adjust for splits, my original 33.33 shares would have become 500 shares. At $346.46 per share, that's $173,230. That's a gain of over $165,000. more than 20 times my original investment. Sounds like a no-brainer, right? But the story isn't that simple. The ride was wild. Month 1. The COVID crash. Tesla plunged from $240 to $85 in weeks. My $8,000 would have shrunk to $2,833. Would I have held? Honestly, probably not. Most investors panic when they see a 65% drop. Month 6. Tesla rebounds. By December 2020, it climbed back to $705. My portfolio would be worth $23,500. Headlines scream, "Tesla to the moon." I'd feel like a genius if I held on. Year 2. The roller coaster. November 2021. Tesla peaks at $1,230. Portfolio value, $41,000. The hype is real. But then comes the crash. By December 2022, Tesla fell to $385, a 69% drop from the peak. My $41,000 would be $12,833. Elon buys Twitter. Headlines scream, "Tesla is doomed." Would I have sold? Maybe. Many do. Years 4 and 5. The comeback. In 2024, Tesla hit new highs above $479. Portfolio value, $239,500. Full self-driving progress, Cybertruck launch, energy business booming. But here's the emotional reality. Watching $41,000 become $12,000. Daily swings of $5,000 or more. Elon Musk tweeting your net worth away. Friends calling you crazy for holding. Sleepless nights during crashes. 87 days with 5% or more moves. Logically, 23 days with 10% or more moves, and a max drawdown of nearly 74%. Most people wouldn't have held. Based on data and what I know about myself, 10% would have sold during the COVID crash. 30% would have sold at break-even. 40% would have sold at 2 times, or $16,000. 15% would have sold at the $41,000 peak. Maybe 5% would have held all the way. If I'm honest, I probably would have sold at $25,000 to lock in gains, then bought back higher, making maybe $15,000 instead of $165,000. So was I wrong? Let's compare. Option A. The vacation. 300+ photos I still look at. Inside jokes with my fiancé. Learned to speak broken Japanese with locals. Got lost in Tokyo at 2 a.m. and found the best ramen ever. Watched Mount Fuji sunrise. Made lifelong friends at an izakaya. Memories that get richer with time. Risks. Could have gotten sick. Flights could be cancelled. Might have fought with my fiancé. Natural disasters. Money gone forever. Option B. The Tesla stock. $165,000 profit on paper. Bragging rights. Early retirement boost. Compound growth potential. I told you so, forever. Risks. Company bankruptcy. A real fear in 2020. Elon's unpredictability. Competition and regulation. Tech bubble burst. What nobody calculates. Hidden costs. With the vacation, I strengthened my relationship, gained cultural perspective, built confidence navigating a foreign country, and have stories no market crash can erase. Zero stress about volatility. With the investment, I'd have spent 5 years obsessing over stock prices, endured relationship tension during volatile periods, suffered FOMO, tax headaches, and lost time worrying. Here's my framework now. When to choose experiences. You're young and healthy. It's a once-in-a-lifetime. Opportunity. You're with people you love. You can afford it without debt. And the memory return on investment is priceless. When to choose investments. You travel regularly, you have clear financial goals, the opportunity is exceptional. You can handle volatility, and you won't need the money for 5 or more years. My balance? 70% invested, 20% experiences, 10% emergency fund. No regrets. The truth: I could have $165,000 more today. But I also might have sold early, spent years regretting it. Instead, I have photos, videos, and memories no market can take away. I took that trip, came back energized, got promoted, and invested my higher salary. My portfolio today is worth more than that missed Tesla gain. Would you have taken the trip or bought the stock? Let me know in the comments. More importantly, what's your next big financial decision? If this made you rethink money and memories, hit subscribe. Remember, you can always make more money. You can't make more time.